So let's say you're Nico, the producer who's listening to this call. Nico, millennial, can't afford to buy a house. What does Nico do? Buys NFTs, buys crypto, because it's an asset, right? All assets are a future deferred consumption. So you buy a house now so you or your kids or somebody else can spend that money in due course. If not, there's no point having it. It's a utility. So assets are just deferred consumption. So
Hey guys, welcome back to Everyday Finance. In this video, Raoul Pal and Tapiero discuss about macro and crypto. According Raoul Pal, imagine you're Nico, the producer, tuning into this call. Nico is a millennial unable to purchase a house due to financial constraints. Can you explain what Nico does with purchasing NFTs? Purchasing crypto is seen as an investment since it is considered an asset. Assets are essentially something that holds value for future use. Buying a house now allows you, your kids, or someone else to use the money later on. Assets are essentially deferred consumption, making them a utility. If you're currently 34 years old and you're looking to build up assets, but buying a house is out of reach, digital assets are a clear alternative, and lots of things Raoul Pal and Tapiero discuss, so please watch the video to end. And share this video and subscribe our channel Everyday Finance. Thanks.
Well, and that's my view, is this alternative financial system attracts more people over time because the old one keeps proving itself to be unreliable and actually disadvantages people. So I think that's the case. It's been, well, both of our core assumption for a while that it doesn't have to be an instant migration like Balaji's saying.
Right.
That migration will come.
Well, it has already. I mean, in the middle of 19, when I launched my fund, it was $300 billion in value. That's what I call digital asset ecosystem as defined by the value of all the cryptocurrencies and all of the equity of the businesses in the space was 300 billion. And today it's 1.7, down from 3.3 at the high a year ago. We tracked this very carefully, but $1.7 trillion is now the value that's in this new world, in this space. And, I hear all of this and you and I go back and forth, more FUD. It's like, people are pointing to Elizabeth Warren. I don't know why. I mean, I don't know how she's relevant to anything. Barney Frank, probably, the least relevant politician I can think of. I'm just the choke point conversations, all of this stuff, but the reality is this is $1.7 trillion in this space after a 70 to 80% decline in the price of its leading assets, Bitcoin and Ethereum. So, and here we are. We sat through Luna. We sat through the FTX fraud. All these problems, regulation in the U.S., $1.7 trillion. I mean, it's true. And that's the proof in the pudding. I don't think there's anything that can take us back down. I don't know that we're going to have a raging bull market tomorrow, but I think for sure the low is in the space, and it happened on the FTX fraud. And on that fraud announcement, which to me was, for the space, the most surprising thing that will happen. He went from wonderkind to fraudster in the span of 6 weeks. Ethereum couldn't make a new low in price. Bitcoin made a new low, pop back up. As we know, old market guys, that's a bullish divergence. The selling's dried up. Let's not get too complicated about things. It's over. And now we have, in the last 6 weeks, real fundamental data to back up why that was the low, right? So I think it's setting up very nicely. We're going to have an inflation surprise to the downside. I'm not sure I'm quite as, bullish on inflation, dropping as you are. I think you're thinking below 2 this year.
I think we possibly headline inflation goes negative this year. There's a chance.
Yeah, that's a giant call. That is a giant call. If
the other person who thinks that is Alex Gurovich.
Oh, Alex. Yeah.
Back in the 19th century, when Dan Tapiero introduced it, the value reached an impressive $300 billion. He refers to the digital asset ecosystem as the total value of all assets. The total value of cryptocurrencies and business equity in the space was $300 billion, but today it has decreased to $1.7 billion. Tracking carefully, Tapiero noted the increase from 3.3 a year ago to the high. The value in this new world is now $1.7 trillion space, and he hears all of this Raoul Pal and Dan Tapiero going back and forth. It's like they're having fun. Some individuals are questioning Elizabeth Warren and Dan Tapiero's relevance to the situation. Barney Frank is perhaps the least relevant politician Tapiero can think of, just the choke point in conversations and all of this stuff. This amounts to $1.7 trillion in this sector. Following a 70 to 80, there was a decrease in the price of its top assets. Bitcoin and Ethereum. Raoul and Tapiero are observing Luna and the FAX fraud. Dan Tapiero is concerned about the regulatory issues in the US. $1.7 trillion as stated by Dan Tapiero is indeed true, and that serves as the proof. He believes that the market will experience a strong uptrend tomorrow, confident that the current low has been reached. Let's back to the Raoul Pal and Dan Tapiero interview.
So let's say you're Nico, the producer, who's listening to this call. Nico, millennial, can't afford to buy a house. What does Nico do? Buys NFTs, buys crypto, because it's an asset, right? All assets are a future deferred consumption. So you buy a house now so you or your kids or somebody else can spend that money in due course. If not, there's no point having it. It's a utility. So assets are just deferred consumption. So if you're 34 years old now and you want to accumulate assets, but you can't afford a house, so digital assets become an obvious place.
Well, it's very easy. You just get, you open your, get a wallet and, you have your, buy whatever one, that you think is going to hold its value and put it on a ledger and, finito. It's easy. You don't have to go through all of the stuff that you have to go through to buy a home. But again, look, I think, home ownership's not going away. It's just that there's a component of real estate that people there's a component of it that for investors is a store of value holder, right? Just like gold is a store of value, but some of the gold money has migrated into Bitcoin, ETH. Look, whether people want to put it into punks or apes, that, whatever, that's up to them. I think that's a lot of, and the other chains right now to me are sort of still more venture. Only Bitcoin and Ethereum really have achieved network effect, in my view, and really sort of count as that. I don't think you sell your commercial real estate property to go into, I don't know, Dogecoin or something.
But you will get young people who can't afford,
right?
Can't fractionalize it. So if you want to put 10% of your savings in, right, you can't afford to do that in a house because it doesn't pay your mortgage payments. So what you end up doing is looking for something else. I think that's your point.
Yeah, and I think that's how, and I mentioned this point before, I think that people always said, and you also always thought that there was going to be, what was it called? The debt jubilee. And I remember once we were talking about this, I thought, there's never going to be a debt jubilee because the result is too cataclysmic and horrible. What's going to happen is all of those hundreds of trillions or whatever it is, 100 trillion of debt that exists in the West is just simply going to get devalued against Bitcoin, ETH, and the assets in the digital asset ecosystem. So if that's value today is 1.7 trillion, if the value of all that debt stays constant and all the value of all the assets in the old world, let's just say stays at a certain place, or let's say it goes up 100% over the next 10 years, the value in the digital asset ecosystem will be up 10x. And so what will happen is that there won't be a debt jubilee. It's just that people who own all of their assets in the old world get devalued versus all of the people who are in the new world. And it's a very subtle shift. And all of a sudden, people in the old worlds are like, well, I thought I could afford that, painting or that house or that car. And now I sort of can't. But I see that this younger guy who is in this project or in whatever, he can. And I think you're starting to see that a little bit.
That's true. If you think about that narrative, the kind of Lambo narrative or the Miami narrative and these crypto guys, it's exactly that, because their purchasing power is outperforming the TradFi guys.
Big time. And look, I think you're getting some TradFi people moving in, but it's still slow. Based on our accounting, only 4% of the world right now have digital wallets. And that's sort of equivalent to 1998 in terms of the adoption of the internet. That's when 4% of the world had access to the internet. So it's still very, very early. I know it feels late because every year in crypto is like 5 years in TradFi world, and I don't know how we're surviving it. I mean, you and I, older guys,
we're actually enjoying it.
Yeah, it is fun, and we know how to manage it, but it really is fast-paced, fast-growing. I do think the traditional world is slowly getting that, there's real, this is real, that there's real math behind it. The Satoshi white paper is not some fictional nonsense. It really is an important invention. And, the initial concept that supports and backs Bitcoin and the Bitcoin network is, like a find. It's a great invention. Yeah.
Conversations with investors. Now you're onto your fourth funds now.
Yeah.
Your conversation with investors, when you started, a lot of what you saw was family offices, right? They got it. They were bigger risk takers. They understood the opportunity. Are you seeing that broaden out? How are you seeing the evolution of the investor base?
Don Tapiero believes that home ownership is a lasting aspect of real estate. There is a component of it that investors see as a store of value, a holder of value. Gold serves as a store of value, but not all gold has shifted into Bitcoin. Let's see if people are interested in investing in it. Punks or apes, it's their choice. Tapiero believes there are many other chains currently on the market. Bitcoin and Ethereum have achieved a significant network effect in the realm of cryptocurrency, making them the top choices for those seeking adventure in this space. If you learned something from this video, then please like this video and subscribe our channel, Everyday Finance, and we will meet in next video. Thanks.